The Monetary Policy Committee's minutes are out, and as we knew before, 2 members have voted against the rate hike and 4 members support the rate hike. All the 3 RBI members support the rate hike. External member Dr. Shashanka Bhide also supported the rate hike, and members Ashima, Goyal and Jayanth Varma voted against it. We are speaking to the external members, Dr. Goyal, Varma and Dr. Bhide. Gentlemen and Ashima, thank you for waiting by. Dr. Varma, the mandate is to keep it below 6%, and you're likely to be violating the mandate for yet another quarter, which is the current one. And that is the primary mandate of the MPC. Growth is a subsidiary mandate. Will that make you want to change your mind?
You see, I have written in my statements that the high inflation that we are seeing today is the result of mistakes that were made in 21-22. Okay? Now, there is no point in saying compensating for that by making the opposite mistakes today. Monetary policy cannot and should not be guilt-driven. The fact that you made a mistake a year ago is not a reason for you to make an opposite mistake today. We know that nothing that we do today, raising the rate by 25 basis points in earlier this month, would not do anything to February inflation, will not do anything to March inflation. Those numbers are there. Those numbers are not going to be changed by what we're doing now. These are things that are going back very, very long, many 3, 4, 5 quarters past. And there's nothing we can do about it today. We have to look forward.
But Dr. Varma, looking forward as well, the Reserve Bank's forecast is 5.6% a year ahead, which is barely within the tolerance band, barely within 6%. The target is 4%. So does one not have to do more to get there?
Yeah, the RBI forecast is based on crude at $95 a barrel, right? Now, when was crude actually trading at 95 last?
I take your point, sir.
I have forgotten.
I take your point.
I have forgotten when crude traded at 95.
No, I take your point, sir.
The Reserve Bank.
No, 1 minute, sir. So 1 minute.
Still not gone to anywhere near.
Yeah, I agree. But RBI's forecast or RBI's assumption of crude was at $100, even when they were forecasting 5.7 for the current quarter. But in spite of that higher assumption they made, look at the current inflation. It's way above what they forecast. So just by sticking to that $95, we aren't necessarily proving that inflation is going to be lower than the Reserve Bank's forecast. It might well be higher as it is in the current quarter, can't it?
Well, so 5.7 is assuming that pass-through from lower crude prices will not happen for the next 3, 4, 5 quarters. I mean, if that is the assumption, then true, then you got to raise rates a lot. If you believe that when world crude is trading at 85, when India is buying crude at 75, crude is going to cost us $95 for the foreseeable future, then yes, rates will have to go much higher, then the rates will have to go up significantly. Yes, there's no question about that. But I do not believe that it is reasonable to assume that our crude pump prices will remain at the same level 3 quarters from today when our crude is costing us so much less.
Okay. Well, it's actually only crude that seems to have come down even today when generally risk assets are lower, metal prices are still high. So there is a persistence of core elsewhere as well. But I'll come back to that point. Let me ask Dr. Bhide. Sir, the fact that the current inflation is the current quarter is much higher than what the Reserve Bank forecast. The Reserve Bank forecast 5.7. It now looks like we're going to end this quarter a little closer to 6. A second point, there is likelihood of higher cereal inflation. So all this, is it giving you the feeling that the Reserve Bank will be forced to push up its forecasts for some parts of FY24?
So I guess what has happened in the Q4 is the January numbers now, and as you said, what happens to the Rabi harvest and so on, I guess will influence, I think, the prices in the next couple of months also. But I think so. The forecast projections for 23-24, are based on assuming a normal monsoon and the crude what it is and the exchange rate and so on. So there is. I think it is important to sort of say that the trajectories of both growth and inflation projections of those trajectories are subject to considerable uncertainty, I think. And so
at the moment, sir, in the near term, is there an upward bias to the forecasts for both these reasons that Jan inflation is higher, the Rabi crop seems to be under a bit of duress because of early and more intense heat, and let's not forget, even the US inflation numbers are coming in higher than estimates, both CPI and PPI. For a combination, would you fear that there is an upward bias to the near-term readings?
Upward bias or the possibility of inflation rate being higher?
Higher than expected. That's what I meant.
Yeah.
Do you think there is a fear?
Yeah, I think there is certainly a risk attached to that trajectory, and I think for the reasons that you mentioned, for food inflation particularly, there is this possibility of food inflation being higher than I think what we probably assume in making that forecast for the fourth quarter. So I think so in these assessments, what is also assumed is that the pass through of higher commodity prices that we saw earlier and the higher energy prices and so on that pass through would be complete, and therefore the core inflation should reduce over time. And I think that is also assuming that there are no additional exogenous shocks to this. And therefore, I think the reason to be cautious at this particular point is that we need to make sure that the moderation in inflation is sort of wider than what we have seen so far.
Okay. All right. I'm sorry we're out of time, but it was a pleasure speaking to all three of you, Dr. Bhide, Dr. Varma and Dr. Goyal. Thank you very much for joining us. The two external members pretty firm that the front loading is done with and now we may be hurting growth. It's time to pause. But Dr. Bhide, as he has written, still worrying that at least in the near term, there are a combination of factors that could push inflation higher. We wind up this special broadcast on the minutes of the Monetary Policy Committee meeting. Keep it with CNBC-TV18. More news and updates are lined up for you.
MCX Zinc Mini Futures Contract 1 metric ton.